decision to hold on to it or switch to Tamil Nadu newsprint that's in the paper segment for the medium term. What's your take, Mr. Prabhakar? Do you think this sort of a strategy makes sense, moving out from shares shipping and going ahead and investing in TN newsprint?
Stock, in the of the late are doing very good. Yeah, so paper stock will continue to do good. But there are other picks like JK paper is there, West Coast paper is there, and there are other paper companies. TNPL is the Tamil Nadu government PSUs. So the performance has been muted, but I think with the paper prices at all-time high, now short-term gains is possible. My short-term is six months to 1 year, and that is possible in TNPL also. But I would prefer to be in the top line, JK paper, West Coast paper, Andhra paper, something like that.
We've got a question coming in from Nikhil Bhatt, and he's asking about housing finance companies, but he's asking for the next 3 months. So Ashish, I guess this is for you. Among the housing finance pack, which one looks good on the charts, and what target would you look at?
If you look at the housing finance company, I think there is most of those have shown very sharp correction. If you look at LIC Housing Finance or India Bulls Housing Finance, so most of them have shown sharp correction and have been consolidating. But even still, if I have to pick, then I'll rather pick LIC Housing Finance. We can clearly see that from the lows of around 330, the stock has managed to show some kind of an outperformance. And if it manages to break above that 410 levels, then we can have much higher levels to be seen in LIC Housing. So the pick is going to be LIC Housing, but try to look at it from a little longer term perspective, maybe a year or more, because over short run, there can be volatility expected. And once 410 breaks, then we can expect targets of around 460, 470 on the upside.
The next one is coming from Dasaradi, and this one is for you, Ashish. He's saying that he's bought Buildcon at the price of 305 rupees per share. Around 200 shares is what he's purchased. He wants a target price for Buildcon.
See, overall, we can clearly see the sector has done extremely well in terms of the real estate space and those sectors. But Buildcon has contradictorily moved sharply lower from that 740 mark towards that 240. Now, recently, it is showing some kind of a strength, some kind of a pullback on the upside. Now, that's a little comforting sign. So maybe it can move back towards the level of 360 or 380 and look at that as an opportunity to be out from this stock, rather invest in something like DLF or those stocks, because that can outperform much better. So use the pullback to be out from this stock. On the downside, the support is around 270 levels.
The next counter is Mahanagar Gas. It's currently trading with gains of about 0.9%, and it's trading at 836. The question is coming in from Shanmuga Sundaram, and he's asking about the stock which he has bought at levels of 795. Mr. Prabhakar, he's asking whether he can hold first of all for 1 year, and can he add more at the current levels?
Yeah, I think so. See, there everybody thought electric vehicle would be coming in very aggressively in next 2-3 years, but there are teething problem. I think gas is the way to go forward. IGL and MGL, we like it very much, and the valuation is very attractive post correction. The global gas prices are volatile. That is why the stock is not performing. Once things settle down, I think IGL will be my top pick, followed by MGL.
All right, this one is from Nazir Sheikh, and he's asking if it's okay to buy NGL Fine Chemical stock. Do you track this one, Ashish, by any chance, NGL Fine Chemical?
See, if you look at the overall space, or if I talk about the sector as a whole, then I think chemical sector has been doing exceptionally well. If you look at NGL Fine Chemical, I think it's only listed on the BSE, and the volumes are erratic. It either goes on the circuit up or circuit down. It's better to avoid stocks with such low volumes, because you can get stuck in any direction. Rather than this, I would advise to invest in something like advanced enzyme technology, which is also shown some kind of a correction and now showing a relief rally and bounce back. So there is a good entry that you can get in advanced enzyme. So I would not prefer staying with NGL Fine because of the low volume. and invest in advanced enzymes, then we can expect a target of 360 on the upside with support at 280 level.
The next question is coming in from Hanumantraya Gowda, and he's asking about Tata Motors, which I'm going to take to you, Mr. Prabhakar. What's the view here? Because on the one hand, you have the domestic business that's doing quite well, especially the PV segment is picking up quite dramatically. But really, if you think about it, most of their revenues and profitability comes from Jaguar Land Rover, and they're getting hit consistently by semiconductors. So how should the retail investor play out Tata Motors?
It's the most difficult question to answer because they are in multiple geographies. You have China, you have Europe, North America, and rest of the world. And India business contributes very little to Tata Motors overall business. So I don't think many analysts cover Tata Motors for that sake because it is going to be very difficult. So somebody who can understand the business, it is okay. But it is a complicated business. Even analysts don't understand and they don't cover the stock. So retail should stay away from businesses which have a lot of diversity because you have news flows which will impact the stock. It is safer to buy Maruti or Mahindra, which are doing very good. If you see the number of vehicles Mahindra is selling now, that has improved. And Maruti is the leader. So you can get in with the local leaders rather than trying to buy pan-world companies where we cannot crunch the numbers or we cannot do a good research in these stocks.
This one is from Kumar, and this is on Adani Wilmar. I'll take this query to you, Ashish. He's saying that he's asking, is the recent lower circuit in Adani Wilmar a buying opportunity? He's looking to buy around 2,000 shares of Adani Wilmar for a short period of 3 months. What's your take, Ashish? Do you think that it makes sense?
See, if you look at any Adani stocks, you look at the Adani group stocks. I mean, look at Adani Total Gas or Adani Green or Adani Ports or Adani Wilmar. Everything has done exceptionally well, but you should time your exit also because the reversals can be very fast and sharp. I would suggest if he wants to invest, he can invest into Adani Wilmar. The stock has already run up a lot from the listing price, which was somewhere around 320 at those days about a month back. It's now doubled from there. So even if he's investing, invest with a stop loss. But if the stock is in lower circuit, he might not be able to get out of the stock. So keep that in mind. If he's okay with the risk, then he can buy at the current levels. Keep a stop loss of around 520 on the downside. And the short-term targets can be 640 levels.
That we are having a little bit of a technical difficulty with the WhatsApp number. So if you have posted your question, then it will take us a little time to get to it. The next question is coming in from Soumitra Joshi, and he's asking about Nykaa. Ashish, do you have a view on this one? We've got Soumitra who's bought at levels of 1220. I know data is limited, but he's bought, he says, large chunks. He's asking whether he should book profits at this juncture or should he wait with a stop loss?
So, see, we have clearly seen there has been a very sharp correction in all the new listing stocks, may it be Paytm or Zomato or Nykaa. Nykaa also showed a very sharp correction from 2,500 levels to the low of 1,300, more than 50% down from there. But after that, it is managing to sustain and showing an upward move. So I would say hold on for now. Use a trailing stop loss method of 1760 on the downside, which happens to be somewhere around 10 days moving average because it is managing to protect that since around 10-15 days. So use 1760 as a stop loss. On the upside, we can expect it to go towards that 2000 level and possibly look at those levels to exit from here.
One is coming in from Amy, and this is basically more on the macro end. She's saying that the dollar index is actually hovering around 100. You have globally the yields that are spiking up. She's also pointing out that the Brent is still above $100 per barrel. This despite that oil release from the strategic reserves. She wants to know for how long will the emerging markets actually ignore this one, and can they afford to do that? What's your take, Mr. Prabhakar?
These are something which sometimes it will impact, but how fast or how slow it will impact, we don't know. So we had a correction, but again market has rallied. This is due to local liquidity. Even before market rallied on liquidity, ignoring a lot of risk to the market. But we need to understand in every risk there is an opportunity. So you take what is happening in Russia and Ukraine. Now there are a few sectors which are benefiting. There are many sectors which are getting impacted. So we need, as an investor today, we have in 2 years the investor numbers have doubled from 4 crores to almost 8 crores. That means too many people are there to invest their surplus. So we need to understand the mega correction might not happen. Minor correction here and there will be there. We need to find opportunities and to get invested. Defense is one sector where India need to focus inside, and that is why all the defense PSUs are making all-time high or 2-3 years high. You take Hindustan Aeronautics, Musgon Dog, EDL, Midani, everything. And I feel in next 2-3 years or 4 years, their revenues are likely to double. That means even their profitability will be double. So these stocks are trading very attractive even after the rally. So we need to look at opportunity rather than worrying about the risk which is there in the market.
Fair point. I'm going to take the next question to you, Ashish. This one's on CVB Specialty. And this is a stock that has rallied quite a bit. In fact, it's up in trade today as well. CVB Specialty food ingredients up as much as 4% in trade today. The question is coming in from Sapna, and she's asking about the technical view and whether it can be bought at the current levels. What's the view here?
Yes, of course. See, CVB Specialty has shown a very good move on the upside. The stock has been touching the 52-week high. The volumes are decent. And after the run-up, it consolidated and now again looks to be breaking out. So I think the overall view on CVB Specialty is very decent, and one can enter at the current levels. Maintain a stop loss of around 466, which is the low of the current consolidation. And once it breaks out, then we can expect the levels of 540 on the upside. I would also like to add to what the prior query which came in with respect to the dollar index and what happening with the crude oil. So it's very important that one needs to understand the correlation between the global market and the commodity with respect to the equity market. There is a lead and lag behavior. So a classic example would be what happened in 2008 when the equity markets continued to rally and the crude was also rallying towards that $147 mark before equity started falling. So there was a lag behavior and then commodity started falling again. So similar expectation can be maintained now. It's not necessary that since the yields are rising, the market should correct, because it takes time to percolate within the system and there is a lagging effect. So whatever is happening globally, the markets are already discounting that to some extent. And maybe after 3 months, we will start seeing that impacting the profitability of the company. So there is a lagging behavior, and that's why you might see that the markets are irrational. But let's see how it pans out.
Absolutely. Let me take this query to you only, Ashish. I'm unsure if you track this counter. It's Orient Bell. It's a company that is actually into ceramic tiles as well. So Sika Nanda has a question saying that it's already bought 200 shares of Orient Bell at a price of 269 rupees per share. Wants to know whether he can hold or exit this particular counter. If you look at the stock price, is hovering around 580 rupees per share. Do you track this one? Would you be able to give your advice on Orient Bell?
Yes, of course. I mean, Orient Bell has done exceptionally well, and I would like to congratulate investor at buying at such low levels and holding on to this stock. Usually you will see people just get out of a stock getting 10% of the profit, but holding out for more than 100% is very commendable. I would suggest that continue to hold on to the stock here, maybe book partial profit, take something off the table, but only partial profit. Stay invested in this stock, maintain a stop loss on the downside at around 500 levels. As long as that is intact, continue to ride the trend on the upside, because I think this stock can even cross above that 680 mark. So book partial profits, very good investment. Do not get out of it here immediately, and aim for the target of 680 or above.
ABFRL is the name of the counter, and just pull it up and see where it's currently trading. It's just about flat in trade. It's at above 300 at this juncture. And the question is from Indumati. She's asking, she's bought at levels of 315. She's making minor losses. She's looking for a short-term view, which is for the next 2 to 3 weeks. Ashish, what should she do on the charts?
See, if you look at this stock, I think it's better to be out from here. I'm not expecting much of a movement happening, and it's near to the cost. So it's no point in staying in this stock as of now. Be out from this and rather invest in something that is an outperforming stock, and we can possibly look at something like AFFLE or something like advanced enzymes that we talk about. That should do much better.
Is from Sagar, and he wants a technical view on Cosmo Films. He's saying that he's holding this particular counter since around 575 to 580 rupees per share. If you look at Cosmo Films stock price, it's trading upwards of 2,000 rupees per share currently. He's asking, what about the future prospects of the company? What about the growth of the company and industry as well? Does it make sense for him to stay put with this one, or should he book partial profits? What should he do, Ashish?
He's looking at the short-term view, and he's also asking about the growth prospects. So that is a little contradictory, because for growth you might have to stay back with the company for at least a year's time. But looking at the overall chart and the performance, I think the stock has done exceptionally well, trading near the highs, and the correction was also very shallow. So continue to stay put in this stock. There is a possibility we can see the targets of 2,500 on the upside. Maintain a stop loss, close stop loss of around 1,900. If that gets breached, then maybe book partial profits, but I think the stock should be able to touch the levels of 2,500 very soon.
Okay, gentlemen, it's time to start the rapid fire segment, and this is where we try and fit as many questions as possible in a span of 2 minutes. So request you to give your answers relatively quickly. The question is from Anup Gowda, and he's asking about IndusInd Bank. Ashish is looking for a short-term target for this stock. What would that be?
Short-term target on IndusInd Bank can be expected at around 1,040 levels.
All right, this one's from Vishal from Dubai, and he's saying, is Affle India a good counter to buy from the IT pack for the next 2 to 3 years at current levels? Currently, he doesn't have the stock. What's your take, Mr. Prabhakar?
Affle India is what you asked, right?
India.
Yeah, no, it is a hold from my side.
Mr. Prabhakar, India Pesticides is the name of the counter. Ved wants to know about this. He's bought at levels of 370, and he's asking whether he should average or should he exit at this level.
No, I would avoid, because I've not tracked it. It is a relatively new listing, so I have not tracked anything. If you want to be in agrochemical, I think Bayer Corp or Dhanuka Agri or PA Industries would be a better pick.
Sure.
All right, this one's from Anil, and he wants to know whether he can go ahead and buy Delta Corp. He's anticipating strong Q4 earnings, but he plans to hold this counter only for 1 month. What's your take, Ashish?
Yes, so he can continue to hold Delta Corp, expecting a target of around 350 on the upside.
Mr. Prabhakar, we discussed IT at the start, but I'll ask you to repeat your view on Infosys. Swayam wants to know what's the outlook. Would you buy?
Yeah, it is a buy from my side, and it is where we expect the results to be good also.
Okay, Joy Sheila Prema wants an entry level for Vardhaman Textiles. Ashish?
See, Vardhaman Textile, the entry can be at the levels of around 420. If there is a dip, use that as an opportunity to buy, but maintain a strict stop of 400 levels.
Gateway Distriparks at the current level. Ashish, would you recommend a fresh buy? Srinivasan wants to know.
Gateway Distriparks at current levels, I would say to stay out, because the stock is just consolidating, not done anything else.
All right, gentlemen, thank you so much for joining in, for answering all the questions that you did answer. Just a pointer to all of the viewers that sent their queries on WhatsApp. Unfortunately, we had a bit of an issue with that number, and we will have to try and take all of your queries tomorrow. Thank you so much for taking the time, though, and hope that you got some answers from what we discussed today. We will be back after this very short break with a lot more, so do stay tuned.